How's it going, guys? Welcome back to another market update. I actually made a video yesterday, but I didn't have the login to my account because I've got a new laptop, as you can probably tell by the audio quality. And today I'll be just going through why I took the trades that I've taken over the past couple of days, seeing that the market has, started to show some signs of recovery. And let's start off with Bitcoin and this trade in particular. This trend line downwards has a little bit to do with it. However, I was actually seeing two scenarios here. And let me bring the other charts up here so you can see sort of the thought process in terms of the higher probability play from a certain type of context, right? You could see that there are two ways of looking at this. You could see this trend line going sideways here, and you could say that our deviation below this level of liquidity was in this sort of region, and any sort of breakout could get faded back into the 50% region or 0.618 region as a final test of the lows before going upwards, right? Obviously, on the other side of this trade would be something similar or akin to this, where the liquidity grab occurs and a push into a range occurs in this mid-range where this cluster of supply is similar to this area, before starting to push up. And obviously at the moment we're sort of at the top of the supply zone of our range at the moment, and we require a break of this to confirm that actual move. But in order to play this, I utilize my indicator essentially. And let me put this on, and I saw very similar features in terms of the actual price structure. And in an uptrend, the 15-minute indicator, 1618 indicator, works extremely well. Obviously, the 5-hour indicator as well has fired off a low signal at the exact low at $74.5 thousand, and it has done that in many circumstances throughout this bull market. Actually, the start of the cycle, the March 2023 low, June 2023 low, near the September 2023 low, and other instances as well where if you put the stops below that, you had a good chance at getting an extreme upside move on Bitcoin. Anyways, back to my point. My point here is that on the 15-minute time frame, let's just change it here, I took this trade pretty much on the line here as it approached, right? Or actually when it sort of hit that line, or just after it bounced off the line, is when I took that trade. And what I saw is a push up, and oftentimes you're not going to see the exact type of price action, but the move sort of has the same sort of effect, if you will. So the top of this range pushes down into the 15-minute indicator, similarly to this, and I saw this curvature occur, and I was saying to myself, should there be a move into the green line? I know this one has a noisy signal that goes up here, but the actual line itself occurs prior, and because of the look back period, this has projected a very close 1618, but you would take this as the reference range, and it actually hits that level similarly to how this level is hit here. And this is why knowing how to measure these levels is more important than the actual indicator itself. And that is something that is obviously my own personal edge. So it's not a piece of information that I'm sharing at this point. But as you can see, we're pushing up from this level above the range high here. However, the context of this certain move has this high as the high of the actual range, and in our circumstance this situation is different, where there is resistance above, so there is a possibility that we come back down and stop this out. However, the reason why I took this trade and I thought that this was the way upwards versus going down to that 50% level is because we saw a few things on charts such as Ethereum, and I did long Ethereum a little bit into the pump, but on a lot smaller size. Something that we see on Ethereum at the moment is quite interesting, and I've been telling a few of my friends that Ethereum is at a good level to be purchasing for a decent bounce, right? And that bounce could get Ethereum at least to the $2,800 level from the 0.618 level. So any bid there would have been a good sort of trade to trade into a 70% rise, right? And because we were sort of at the 0.618 level for Ethereum, looking like we're going to bounce, like how much more down we have gone? You're better off betting on the pivot to the upside than more to the downside. And, you know, that influenced my bias on Bitcoin as well. Also with BitTensor, I've been adding to my positions. As you can see, all these stops are managed risk of, I believe, $100 each sort of stop loss, and they haven't been stopped out obviously, and the prices continued to go up, and this also influenced my kind of perspective on the market as well. And BitTensor is the leading token over the past 7 days in the top 100. Not surprising at the moment that in this large range that has been created, the RZ, the reverse golden pocket rebound zone, has been rejected, and I've been monitoring this level as a potential level for a rejection, and it has started to pull back from there, and there could be a retrace to retest, you know, $280 level and create some noise. And if Bitcoin starts to or continues to rise, I can see this appreciating much further, and I might go over the actual price targets of this later in this video. Moving on to NIR and my long in NIR, I actually got a long below the 0.65, and the reason why I long NIR is, one, obviously because it's an infrastructure project, a layer 1, and also the pivot to AI that it has done, and it is also DCG's, I think, biggest holding. I think before Tau pumped, actually, a bit above Tau in terms of how much of this asset they held. So pretty much betting on DCG's AI basket here, or Grayscale's basket. So yeah, that entry is pretty good and very minimal risk and exposure there. It's only 900 total in risk, so not bad whatsoever. And I could definitely see this hitting the range high, and that would be like an $83,000 profit should Bitcoin be extremely bullish and at the highest level at the previous bull market highs. And we'll monitor this as Bitcoin rises to the 150k level should we be bullish. Because BitTensor is my main sort of bet this cycle, and the fact that it's leading the charge in the top 100 is a very good signal that the narrative of AI could reignite the attention in cryptocurrencies. And with the birth of subnets and dynamic Tau, there could be more attention in the BitTensor ecosystem, because there's a lot of gains to be had betting on subnets at the moment, because you're seeing multiple subnets doing 10x's, and obviously people are going to want to bet on those trades essentially, and that will obviously get people purchasing more Tau. Similarly to how Ethereum operated or still operates to this day. Now, in terms of the price targets, let's draw these out just so we have an idea of where I'm seeing the levels for BitTensor. And to be honest, if you're a BitTensor maxi, you probably want higher targets, but these are my my conservative targets at the moment, and probably where I will be taking profits and potentially fully exiting. But it's completely dependent on where Bitcoin is at that time. If Bitcoin is not sort of topped out, because I've actually seen that like at the highs that BitTensor has created has been at the times that Bitcoin has created highs as well. So I'll be looking out for a few things, and moving on to US dollar dominance as well, US dollar tether dominance, and explaining away where I'll be looking for confluence to take exits on the trade, and whatever level, well, what takes precedence for me will be the tether dominance before anything else, as well as the Bitcoin high level as well. Whatever targets that I have, if they coincide with those indicators, then that will be like a very confident place for me to take money off the table. But yeah, at the moment I'm seeing 1800 as that level might extend over the top, and I can provide an example here, and I did provide this example previously for Near protocol, and I know I'm in Near at the moment, but Near did produce a very similar price structure to what BitTensor is doing now, and I did mention this in a previous video. And you can see I am actually applying the very same logic in measurement as I did for BitTensor for Near. And you can see that the 4618 level is the top for Near, right? And this drop in Near was 79%, and this drop in BitTensor was approximately 78%, right? Very similar. Retest of the top of this wedge, push up, retest at the top of this wedge, push up. And what I'm essentially measuring is this swing high, swing low, as if the ball was thrown and bounces from this level, this high and low level, and it projects out that 4618 and 4236 level, and you want to be taking profit starting from and going to that top of that range, right? Not only this, we can I guess cross-check this with the BitTensor and BitTensor versus BTC chart. And let me draw these things out fresh, just so everybody can have a look. And why I've circled these is because they're similar in structure break, right? There's a very violent capitulation wick, and then we start to bounce and then break above the sloping trend line. And that's occurred on both of these occasions. Cool, sweet, very simple and easy. And how I've measured this is a very simple way of doing it is like so. Measuring from the bottom here to the top of this wave, and it gives you a 4618 box. 4618 box, meaning the 4 box is from blue to yellow, 3 box is from blue to red, 2 box is from blue to yellow, so on and so forth. And what do we find here on this side? I'm going to take this low here and the high that's created here, and that's the conservative level, right? Obviously we could go to this absolute high, but I think that this falls in line with the narrative that I have for BitTensor at the moment, and also my estimations of the Bitcoin high as well. And what we're seeing is approximately, if we were to go to the around mid-range of this 4618, and I would say that that could be that high there because of this high here as resistance. I know I have a diagonal resistance there. I might remove it just so we can have a look-see, right? That is approximately, let's call that 3x, so 3 times, right? 3 times. And what do we have for Bitcoin? For Bitcoin, what we have right here, I will do the exact same thing, and I might do an exercise here where I go through the Bitcoin chart throughout history to show the same principle over and over again, just to refresh everyone's memory, and you can utilize this for yourself. The start of the 2011 cycle, throwing the ball from the bottom, and this is a macro measure, and the bounce at the lows, right? What do we have here? We have an exact 4618 top. You could even move that to the bottom here. It doesn't really matter, it gives you that top level. Now, let's move to the 2015 to 2018 bull market. Find the low here, absolute low. Find the swing high and measure for the swing low. I'm just dragging it all the way out so that we can get that level nicely. And what do you see? You see that between 4236 and 4618 level is the perfect place to be taking that profit. Now, in this cycle, there are two ways of measuring the absolute high of the cycle. And I really do like using the absolute bottom of the previous move, or the bottom that starts the ascent into the highs of the cycle. So for this one, I'm gonna use this low and the swing high and swing low here. There's two ways of doing this actually, right? And that will give us a 4236 to 4618 level. And I know that there is a large spike down, but it doesn't clear this low, so it's still a very valid measure of where this high is going to be. And it's worked exactly the same way 3 times in a row. Fancy that, huh? Now, what do we have for this cycle? And you can argue that we're going to go higher than the levels that I'm going to be marking out. However, I'm not going to play my odds against so far 100% probabilities. And as you can see, the levels that we have marked are, and this might make a few people happy, it might make a few people upset, but it's between 150 and 180,000. I'll just squeeze this down a little bit more just so we have a conservative level, and hopefully we can mark out somewhere reasonable. Perfect, 150 to $180,000. Awesome. How do we verify that this has a high chance of being that high? We can actually go back, and I'll delete this and show other measurements that sort of do the same thing. Hopefully this is helpful for you guys. If you're finding any of this helpful so far, like the video, share with a friend. But let's say, for example, we utilize this move, low, high, low, and you get the 4236 level and 4618 level here, right? And it's in between that level. I can't remember if this works, but I'm going to try it anyways. This is the kind of impulse wave of the move. Pretty much perfect. I actually shorted this level as well because it was the full range from here to here, the RZ point. If you've known me for a minute, you know that that's a trade that I took and was very, very pleased with. Anyways, let's do this as well. Which move started this? This is the impulse move. This is the wave down. And we get a 4236 to 4618 level every single time, right? And this works with any asset class. The more parabolic the move, sometimes it extends further. However, with a more mature asset like Bitcoin, I suspect that the move that we're going to get stays within that reference range. So we're going to do the exact same thing for this move, should it be the impulse wave that takes us into the highs of the expansion. And for our expansion here, we're actually seeing 4236 appear at $154.8 thousand, and 163,000 or 163.7 to 164,000, right? What else are we going to be looking at in order to make that exit? So now we have like a really, really good idea of where the absolute cycle top's going to be and where to start de-risking should Bitcoin get there relative to the macro, and also more of the mid-term / micro range in terms of our projections. So we have a lot of things in alignment now in order to have our exit strategy should these things align and occur, right? And I've already drawn this in advance, and this is something that I've learned time and time again not to fade and neglect, because I did neglect the fact that this was going to be a high, and I'll show you in a second why. But when you measure the 1618 from the swing high, swing lows, right? There's actually a swing high here and swing low. So from the absolute high, there's a swing level, and the 1618 level is where you start to de-risk your position, right? Swing high, and that was the initial part of this swing. So that's measured from there, high, swing low. You can actually go like this actually for this one. And this is sort of going to be similar to how I'm going to look at this section here. And then it corrects and makes another swing high, swing low. So the 1618, there's always a rejection, like 100% of the time. Like, I don't make the rules here. That's the probability here. I've seen so many people do tether dominance charts, and I don't think anybody has a more accurate way of both measuring the Bitcoin price objectively with Fibonacci's and also the tether dominance chart with Fibonacci's to an exact amount, right? Obviously it's not to the tick. However, it does inform you that risk is increasing significantly as you enter these regions, right? This is the March dump from 2024, and that went on for an extremely long time before recovering, right, and making Bitcoin's new all-time highs. And when Bitcoin did make its all-time highs, I did have a measure, like you saw before, of that $110,000 region, and also the risk was extremely high because, as you can see here, the swing high and the swing low actually printed an exact 1618. Fancy that, huh? So now, in terms of the current context, we see the swing high, swing low created here. We're looking at the 4.38% level in order to start to take some profit, right? And if there are some alignments with fibs on anybody's charts when it comes to Bitcoin, your altcoins, you would cross-check everything before taking that exit, right? But you know that risk is increasing significantly when we start to tap that, and there's probably going to be a correction here. It could be the absolute high of the market. Don't get me wrong. It could be the absolute high of the market that goes there. If it's in the $150,000 region to the $180,000 region, I'll assume that that is the top of the market, and there's too much risk for me to want to stay in because there's been heaps of upside for Bitcoin, and I will just wait to see how it plays out. Obviously, with strategic reserves and countries buying, but what I'm seeing with the stock market at the moment, we're on the precipice of a recession, right? Obviously, the unemployment data has come back cool. However, yield curve inversion is accelerating, and actually, let's take a look at that now since we're here. I haven't had an update in a while, so this will help everybody, I am hoping, have some perspective on what is going on. All right, let's use this chart on this side, and it's going to have levels from which we can assess the highs, right? So I put the green lines, as mentioned in previous videos, where the S&P 500 highs have actually been or have actually come in, and recently we've made a high just before this inversion started to accelerate, right? And the markings of acceleration is what precedes recession, right? Or the recession is already occurring, and the Fed actually starts to cut rates more aggressively as the bond market starts to fall. And I've been watching the Fed, what's it called? The CME watch probabilities of a cut, and every time that the bond market bounces higher, we actually have less of a probability of rates cutting. So we're actually dumping now in the bond market. I wonder where that sits at the moment. CME Fed watch. We actually have at 13%. So at the moment, the Fed doesn't think that they should be stepping in reducing interest rates, and perhaps that's an okay thing. I've seen that with interest rates being cut more aggressively, that's when something has gone wrong and they're cutting into a more hard landing. But at the moment, because they're not cutting, they're seeing that the economy is robust and strong enough not to require a rate cut, and that probably has to do with unemployment data as well. They were scared about the tariffs, and the probability did go up to 50% for a May cut, which is occurring not too long from now. I think like 2 weeks from now, on the 7th of May. But as you can see, we're seeing accelerations here, and we've already seen a stock market rollover occur, right? And if you look in history, let's it might be easier if we overlay the S&P 500 here. Sorry if this is a little bit scattered of a video, but stick with me and this will kind of make a little bit of sense here. And you can see with the acceleration that occurs, the stock market has already dropped at prior from the acceleration, right? In this circumstance, it accelerates first before the rollover into the GFC occurs. For COVID-19, this spikes up and the price drops. However, it does recover extremely quickly because of money printing. And at the moment, we can see that we have an acceleration, and prior to this acceleration, there has been a market top, a 20% drop that has occurred. So what I'm trying to say here is there's a extreme amount of risk in the fact that there isn't a lot of time left in this bull market. And going back to my targets for Bitcoin is that it's not impossible for Bitcoin to do its final rally into the $150,000 region when the S&P 500 might bounce back. I've already drawn it into the $5,600 region over the next couple of months, maybe a little bit higher. Maybe it matches its all-time high here, or to the level that I've marked as the high for the S&P 500, which is 6.3 thousand. And the fact that we've fallen short of here is a little bit confusing to me. And I know like it's extremely close. However, I thought that we would be touching this level because of the significance of this fib level in the history of the S&P 500. And if you're still with me, I'm going to go through this once more just so we have a bit of context, because I know there's some new people who come through and see this video. But how I measure these moves is that I take the largest swing from the lost decade that occurs, and in this circumstance you can see that these levels are boxed out, and where I've been measuring from, it creates a 618 level. And depending on the duration of the real estate cycle, so 18 years or so, you'll find that in these other two instances, that we hit a 618 level and pretty much reject from there, right? Well, we do hit it, and that's the important part. We do touch and sweep the level before correcting. And as you can see in 1965, we do go shy of the 1618 level and dump 20% before ascending back into the 1618 level and further rejecting from there. And this could be similar to the circumstance that we're in at the moment in 2025. In .com, we hit the 4618, and now what we have in 2025, if you measure like this, right? You have that red line of 6.35, right? What if we drew it from back here? Maybe it would have hit it like already, right? It makes less sense from this level. So it is the widest range that is created, right? So it's not impossible for us to do something like this and start our lost decade in a wide range chop that is extremely, extremely, extremely hard to trade and accrue any value from for the foreseeable future, right? I don't know what happens next on the right side of this chart. However, if history is, going to rhyme in a sense, I would imagine that there potentially could be a rise into this level, and I'm not overly confident about that right now because I've seen this fall, this drop here looks pretty bad, but these things can turn around. What I am more confident with is Bitcoin making that recovery into the $150,000 region when this does a bit of a brick bounce here and potentially coming back down, either being here or here. It doesn't really matter to me, but the risk starts to increase the further this goes up, in my opinion, and it would be totally maxed out once and if we hit that $6,354 level, but we're super close to the top. That could have been it because of the yield curve inversion and the fact that Bitcoin is very, very close to the $150,000, $150,000 to $180,000 region. We're looking down the barrel of the end of this cycle very, very, very soon. So, and that could be mid-year to end of year, just depends on where things end up. But should Bitcoin take, what I'm looking at to be invalidated is if Bitcoin takes out the $74,000 lows and stays below there. So essentially this trend line here as well. If it closes on a weekly basis below these lows, I will have to revise my sentiment and bias on the market. But so far, we're looking at not a very bad setup for our next expansion into 150,000. That was a super long video. Hopefully everybody watched that on 2x, or I don't know, you can do 3x, just 2x. And yeah, hopefully I provided some value, and I'll speak to you guys on the next one. Cheers.